JB here. Hope everyone's doing outstanding. Thursday, March 13th, 323 on this fine afternoon. Talk quick about the market, some of the names I'm looking at. Go from there. S&P down over 1% here today. Just some continuation after yesterday's, I would call it a lackluster rally. I mean, S&P was up nearly 0.5%, but it just seems like the downtrend hasn't found an obstacle yet. Maybe we get it uh, overnight, tomorrow, over the weekend, but something's got to change here, right? And today it's like one of those. It wasn't even like a volatile session, no big dips, just a slow and steady melt, like an ice cube in the hot sun. And the markets, every time it looked like maybe they would find a little bit of bounce, just off to the downside again. We had the possible, um, well, at least a truce between Russia and Ukraine again. The markets popped on that news, at least it looked like, and then gave back those gains. So, you know, interesting. I mean, if you've been around in some of these huge, I mean, it's only been 5 years since COVID, but you go back to 2013, 2014, 2008, 2009, when we've had these big downturns, and even at the end of 2022 with the higher for longer narrative that people got worried about rates either continue to go up or what have you. Uh, you typically we'd have more volatile sessions, right? And you would spikes, bounces. It doesn't feel like, especially today, it's like almost like the icing on the proverbial sell-off cake, right? I don't know. And then you look at the VIX, and VIX was pretty much flat all morning, and then it spiked a little bit. It was up 5%, but not anywhere near what we saw in December or back in August. And then it was flat again, and the market was still down over 1%. Right now, the VIX is up 2% at 24 here. And what's funny is the VIX was at 23 back in September and October. So, and a heck of a lot different environment, right? We were marching near highs in September. So, just and some people are citing maybe the insane volume and activity on the 0 day to expiration options are skewing the VIX. Maybe. I mean, it's tough to make heads or tails. Typically, when we would have this huge move, February 19th highs all the way to correction territory in such a short duration of time. You would see the VIX spiking a heck of a lot higher than where it is, and it's not. So I, I don't know if that's, yeah. And considering the melt off today was like a just similar to what we had Monday. It just seems like a, I don't know. It's just a slow, steady melt. Like the buyers aren't really stepping in. So maybe that'll change. I was talking about the RSI being under 30 heading into yesterday. We had the bounce, and sure enough, we're back under 30 on the RSI, so down to 28. That's traditionally it's considered well oversold conditions. RSI under 30, RSI over 70s traditionally seriously overbought conditions. Doesn't mean we can't continue to rally or continue to fall. It just historically speaking. So that's kind of the SPY. So you take a look. We got down to the 552 handle that we hit Monday. Oh no, actually that was Tuesday. Was it Tuesday? Monday? Yeah. Um, then broke through that. Actually broke under 550 for a little bit, getting close to the correction territory. Then territory bounced. And here we are at 551 on the SPY with 34 minutes left. Hopefully the markets could find a bid here and not close the lows. It's like I would prefer. I keep saying I prefer like a gap and big sell off at the open on a well, tomorrow will be a great time for it, and then reversal, get some capitulation. But until that changes, it's like normalized selling, right? But people are used to this now, so it's like okay, and no one, I don't know. You would typically see some dip buyers, and you see some of these names just uh, beaten up too. Take a look at the SPY. And I posted a chart before. It's pinching. Rarely do you see an index pinching. So, and it's not like we're in bear market territory. We're not down 20%. So, and then some other things to note is the moving averages, right? So now you're down to 36% of stocks on the S&P are trading over their 200-day moving average. So market breadth is not good either. What do they say? Downtrend, lower lows, lower highs. So that continues. So we need some kind of kick. It wasn't a CPI data yesterday. And then these headlines around the tariffs continue. So earnings aren't going to save us. So maybe it'll be some kind of technical support and a bounce or some capitulation move, right? A big sell-off tomorrow morning at the open and reversal. That's kind of the overall market. And then, yeah, take a look at the VIX. You wouldn't even think we're in a down. It's like almost like, go back to September, similar volatility or implied volatility into the election, right? So anyway, so the thing is, and even today when the market's melting down, I'm trying to find some put positions, some put hedges, right? So I'm looking at Visa, I'm looking at Mastercard, I'm looking at some of the financial, Goldman Spectacular, JPM, and Visa. The puts are up like 30%, and stock's down 1.2%. But like that doesn't that's implying that you got it yet. Either got the puts yesterday, you timed them perfect. The the strike. So right now, let's go to Visa, and even JP Morgan's a great example. The puts are up like 20%, and it's down 1% here. So even if you want to try and hedge it, you would have to have been in the puts either yesterday or timed the top today, right? I so the risk reward there is tough because all it's going to take is one bounce and those premiums are going to be gone. So you're going to be losing money on the put hedges. So that's another great example is strategy. MSTR. I mean, pretty much every call input is not up quite a bit, even close to the money. So let's say you go and you want to play strategy as a put hedge, all the puts. So let's get 240 and below are down. They're 60%. Uh, well, they're down 6% from yesterday's close, even in the money. So you go to 270s, those are down 30%. And then you go to the call side, and the call sides are up like 10%, barely. And I mean, that's great if you're trading in index, but when you're talking about a volatile instrument that expires tomorrow and can have some swings, I mean, that's the risk, the reward you get to hold that risk it's not jiving, right? You just can't rationalize that. So in lieu of that, I could probably, pending anything crazy, I'll continue to look for small spec calls to play for bounces because those seem to be less expensive. And I think the reward is going to be, well, based on what I see in the put premiums right now, will be much better. Take a look at some of these other names that I wish I had a little bit more hindsight. And back in December, I was talking about the tariffs and I was looking at, well, into it because of the new administration, the possibility that they get away with, they do some streamlining of the IRS, right? And I think 33 or 35% of Intuit's business is based on their TurboTax program and software and all the revenues and stuff related to that. But then I was also looking at Deckers, right? And some of it was, I'm like, Deck was at all-time highs. I thought maybe if there's even a hint of some kind of tariffs coming through, especially in Asia and China, that's where they produce most of their products. There's got to be some kind of ramifications, right? And even if it's even so slightly hits their business, the margins, it's priced for perfection. Stock was at all-time highs, and then sure enough, take a look at it now. Hindsight's 2020. And then take a look at another name like Restoration Hardware. And I kick myself. I was watching it the other day, and I'm like, I just took it off my radar. And then another name. I mean, a lot of this stuff is produced abroad. So I can go on and on about it. But the thing is now to try and trade some of these, the premiums are expensive. So even if you want to try and time for more downside, a lot of the meat has been taken off the bone already. And then you're kind of like fighting over the gristle with the vultures, right? And it's going to be a tough one. All right, so now individual names. So Intel, I was talking about on the watch list this morning. I was talking about Intel a couple of weeks ago before it went on the big run up to 27. I think it's a great thing. They got the CEO from Cadence. Was on the board, talked about possibly spinning off some assets back then, or at least maybe had a spat with when he was on the board. That's why he stepped down. Now he's back on board. I just think it bodes well. And you take a look, 200-day moving average there on Intel's 23.99. It got all the way over 24 before pulling back a little bit. Unfortunately, I didn't want to miss out on the bigger move. I got the calls for next week, and then the premiums just evaporate a little bit. I mean, they're still not destroyed, but I wish they at least held the premium. I'll continue to watch this one. If it finds more support tomorrow and breaks back over 24, I might look for some more later dated strikes because not only is this a play on a new CEO, but it's a play on maybe some of this, and it sold off when TSM announced their investment in Arizona. But you have to think this, like, even if it's just Adam. So America Now kind of situation. And I think this is one of those names that have been floated. Anyway, so I kind of like that more. I'll have more on that on the watch list. Then, oh gosh. All right. And then VKTX. And VKTX, I was talking, if it broke over 30, I was going to get some calls. Got some calls into next week once it broke 30. Sure enough, pulls back with the rest of the market. Then it finds a bid in the early afternoon, back over 30. And then it's been chopping around here at 29.70. I mean, good sign here. Relative strength. It looks like it's been consolidating since the March lows. Any hint of a bounce, and I think it takes off to the races. And don't need much to make some money on those calls into the low to mid 30s would do. Then, unfortunately, some other names. Roku trying to catch a falling knife here. I broke over its 200-day moving average yesterday. I thought any slight bounce and it would squeeze 76 plus. Sure enough, after trying to hold up in the morning, it succumbed to pressure. Another volatile name. I mean, it could be up 5, 6, 7% in a day. It's going to have to be up a heck of a lot more tomorrow. But if that holds, maybe I'll look for some more strikes on that one. Arista Network was just green just a little bit ago before pulling back. Another name, I might get some strikes into next week, depending on what the market looks like. And inexpensive, that's what I'll continue to do. Very far out of the money, inexpensive for a bounce. Because when the market will bounce at some point, unless there's some other black swan event, and then it won't matter about the market, right? If there's war or whatever. I usually say that people will get they hoping for financial Armageddon, but like if we get to financial Armageddon, then having puts and calls, it's not going to matter, right? So rants for other days. All right, so Arista. I already talked about Visa, MasterCard, JP Morgan, MicroStrategy. Baidu was looking great this morning. It was actually over 96. I was looking maybe to add some 105s. My 110s were back to life. And then it just kind of melted into the afternoon. Still like this one. 95.75 was the key breakout point. It broke above that, just held that for a minute and pulled back. I have to think, especially if the market finds some footing. I keep saying that, but I think that one's a nice play. I'm trying to think of some of the other names here. I mean, there was a decent amount of green, and there still is on my watch list. Some of the quantum names are going. I guess the new study on they were able to use their chips in a non-cooled server. I haven't really done as much due diligence into that sector as much, and when I started to, that's when they were already running. So I probably would have been caught up with the hype. And some point, when I find some time, I'll look into that. I'm trying to look at some Redfin still hanging here at 1046, but need a big move on that one. I think that's it, folks. Yeah, and if things get really bad, the 3-time ETFs work, right? And then I was looking at FAS calls this week, and the FAS calls, it's sitting here at 670. FAS is up $1.70. It's two-time bear ETF. But either way, you look at the calls, and it's like not worth the money hedge-wise, unless there was some crazy sell-off, and I guess then you bank. But it's tough to find hedges. SRS, I was looking at SKF, and even doing the reverse, trying to get some FAS puts. But again, these names have been holding up, so it's been tough. Anyway, folks, 25 minutes to the close. I'll be back on audio later. Rock and roll.